Welcome to Making Money. This is Matt McCall. Thanks for joining me here on a Tuesday. It's the 18th of January. We get the markets selling off a little bit after a long weekend. We're going to talk about the markets today. We're going to talk about Bitcoin back to that support level. We're also going to talk about the best performing auto stock of last year. I bet you can't guess. And we're going to dive into some of the other auto stocks and some big news coming out. We're also going to talk about EVTOLs, otherwise known as flying cars. Some big news coming out in that sector, and my goodness, I dove into the numbers and I got some names for you. That and so much more are coming up right now on Making Money. Again, this is Matt McCall. Thanks for joining me on this Tuesday, January 18th. Still down here in sunny Florida. I got to tell you, I didn't realize it got down into the 50s in Florida. It was chilly as heck this morning. I loved it. This is some of the greatest weather. I should have done this 20 years ago. You wake up, you put the sweatshirt on, you go get your coffee, you come back, and you can go to the beach later in the afternoon. What an amazing life people live down here. So quite a bit to talk about here today. I want to talk about the markets first. I'm going to pull up a couple charts here in a second. But we're selling off again right now with interest rates once again going up. So let's take a look here. I want to pull up a chart first off of the Qs, the NASDAQ 100. And I went ahead and I drew some lines in here prior to jumping on the podcast this morning. And, you know, we've only been open for about 20 minutes right now, so I'm doing this in the morning. But you can see this is the Qs, and I drew a white line here for you, and I connected the lows. I talked last week about the definition of an uptrend, and it is higher highs and higher lows. That's what we've been seeing here in the Qs for the most part. So these higher lows are the bottom line, which is the uptrend line. And as you can see in the chart, we've pulled back several times, going back to last March, last May, again, end of September, early October. And then again, right now we're pulling back. And we're sitting just on that white line. This blue line here might be tough for you to see, but that is actually the 200-day simple moving average. Also a very important longer term indicator. So we are sitting right in a very important support level, something to keep an eye on. If we bounce off of there, it's very good news. We could go sideways for a little bit. We could break it. I don't know. And if we break it, we probably come all the way down to this 350 level or somewhere near there according to the charts. I will say right now, I think we probably hold in the near term, but we're going to keep an eye on it. Right now, the NASDAQ 100 is down about 1.8%. Again, very early trading, and we'll see how we go. And we'll keep you up to date. You know, I'm obviously doing this every Tuesday and every Thursday. Now let's take a look at the SPYs, the S&P 500. Again, I went to the liberty of adding that uptrend line that we've had here over the last few months. And again, you can see we're down about 1.5% this morning on the S&P 500, which is a pretty big pullback after bouncing and rallying on Friday off a low. So again, we are sitting right at this level, this uptrend line. Again, that blue line is the 50-day moving average. Now over to the small caps, which I still believe the small caps are going to greatly outperform this year. And I've showed you this chart many, many times, but I think it's important to keep looking at it, that how many times the IWM, which is the ETF that tracks the iShares Russell 2000 stocks made up of this index, small mid caps, mostly small caps. But again, back down to the support level, this line, and look how many times it's hit it. If it breaks it, it's not a good sign, I'll be honest with you. But again, I think it's going to hold, and I'm not going to anticipate anything. But I'm looking right now to potentially put a little money into some small caps because based on history, if it bounces, it could get a nice little bounce from here and could get a nice 7-8% bounce, which is a nice movement in a very short term. So again, we're going to watch these charts very closely for you. At this point, you know, it's tough to really anticipate exactly what it's going to do. I try not to, try to guess because I think that takes away all the edge that I have. I'll let the charts tell me if we start bouncing off support. Then it indicates that, okay, we've held and we're probably going to move up in the near term. One other chart I want to show you here as far as stocks, indexes and indices and ETFs are concerned. This is the ARK Innovation ETF. It's down about 2% today. You can see way down there. It's a little bit off the lows of the day already, but it's very early, as I mentioned. What you see, though, it is just, this to me, I'm starting to feel like it's capitulation. And capitulation is basically when everybody says, I'm done, throwing in the towel. That is how I feel right now when it comes to this. Does that mean it's the exact bottom? No. I talked about this last week, and we're a little bit lower than we were at that point. I still believe that we could see a little bit of selling in some of these growth innovation stocks. Some of them within the ETF, I think, are great buying opportunities right now. Again, I don't know where the bottom is, but I do believe that we are very close to it as far as the growth and innovation stocks are concerned. You know, I read a bunch this weekend and a long weekend, and there's a few people out there, obviously saying, I told you so, I told you so, growth and innovation's dead. And I just find that a bit amusing because if growth and innovation's dead, then the world is basically dead. We're going sideways. It just doesn't make any sense to me. Do some of these companies and stocks get overvalued and pull back? Yeah, and they become undervalued. It's a natural cycle of a business, the stock market. So it's just, I find it laughable that people are taking these victory laps, and I don't even really believe that they actually said it back then, not to be in them. Victory laps when you're seeing companies fall down like this, and how they think it's good for them, the world, their children or grandchildren, if innovation's dead. I mean, it's stupidity when you hear some of these people talk, and it's amazing that they publish these people and they put them on television. Absolutely mind-blowing. Anyway, the ARK Innovation ETF continues to get hit, down over 50% right now. I feel a bit of a capitulation. And I have another chart here I would like to show you, and I thought this was pretty fascinating. This is the assets under management for the ARK Innovation ETF. And what it means by assets under management is how much money that they are managing in that ETF. So you can see here, I took back about a year, topped out around 28 billion. We're now down probably right around 13 billion. This was as of obviously last Friday, but around 13 billion. So it's lost over half of its assets along the way. People pulling out money, the value of their assets dropping. So you're seeing, again, this looks like a capitulation to me when you say that amount of money coming out of one ETF is just absolutely mind-blowing to me. So I want to kind of move on from there and just look at Bitcoin here really quick. And again, here with the Bitcoin chart, it's one I showed you last week, and I'm going to see if I can, my line's gone, but I'm just going to put that dotted line there for you, that horizontal dotted line. And as you can see, we are back down. We tested it right here, this low. It's just below 40,000. It's around 39,500, 600. We tested it again with this little sell-off last week, and now we're down to 41,400. So we're holding above it by about $2,000 or so, $2,000 or so, give or take. So we're still okay above it, but we really want to see this hold and start to see uptrend start to form here in Bitcoin. But again, a chart that we're keeping an eye on. And again, there's a major theme that we're seeing here. A lot of the asset classes right now, whether it be stocks, whether it be Bitcoin, they are all getting very close to support levels. So it's kind of like time to shine. What's going to happen? The eyes are on you. Are you going to hold these support levels and bounce back, or are you going to break through support and continue the selling? So again, I don't like to try to anticipate what's going to happen. I lean towards the bullish side because I believe innovation will come through, and I believe stocks will be higher by the end of the year. I just don't know how much they go down in the near term. I mean, anybody says that they don't know. So some news this morning came out that Microsoft is making a bid for Activision, the big video game company you probably heard of. You think of Activision, you think of Call of Duty, Warcraft, Diablo, Overwatch. Those are big franchises, and they have a lot of esports where actually people go and play them, especially Call of Duty and Overwatch. And then you have Microsoft, which owns the Xbox, which is a gaming console. They have the Halo video game franchise, which kind of fits in there. So they offer just over $68 billion. That's about $95 a share. So it's about over 40% premium to Activision. And I'll pull up the chart here of Activision and show you how it's doing this morning. As you can see here, it is up about 30%. But as I mentioned, they're offering more than this per share. But a lot of times, markets down like this, and a lot of times people just they get concerned that it might not go through. So there's always that bit of a difference that's built in when a company is going to be taken over as it gets closer to the deal being done. But the deal won't be done for many, many months. It's going to take some time. It's probably going to go through antitrust laws, everything. It's going to be probably a little sticky to get through, but it's something that you want to keep an eye on. And let's just take a look. I haven't looked yet this morning, but Take-Two is another one of the big ones and see if they're moving. Yeah, Take-Two's up about 3.5%. In sympathy of the move in Activision here as well. So you can see some of the gaming stocks probably taking off. And so we could take a look at one of the gaming ETFs here, which is GAMR. And yeah, it's up about 0.1%, which doesn't sound like much, but considering the market's down 1.5% to 2%, it's actually holding up pretty well. So that's something just to keep an eye on, those news that came out this morning. So I want to ask you now, what do you think was the best performing auto stock last year, auto manufacturer? I'll give you a couple seconds. If you guessed General Motors, You're wrong. If you guessed Volkswagen, you're wrong. Toyota, wrong. Nissan, wrong. Honda, wrong. Tesla, wrong. Ford Motor Company was the best performing stock of 2021. This is the performance of some of the major auto companies last year. Ford Motor more than doubled the next best. We have Tesla up about 49 and change. We have General Motors up about 40%, Volkswagen up about 40%, Porsche up about 34%, Toyota Motor Company up about 20%, and then Stellantis, which is Chrysler and Jeep, Fiat up about 3%. But again, look at Ford, 136% both. The next chart I want to show you right here, this is the market cap of Ford overlaid all time with its share price. What is pretty fascinating here too is the purple one is the market cap. That's the value. And you find the market cap by taking the amount of shares outstanding, how many shares are out there, and multiply it by the stock price. Well, at that time, the market cap was around 67 billion. And this was back in late 90s, about probably 98-ish. And at the time, the price per share was around 38, 39. However, because there's been more shares issued along the way, we now have the stock price around 25, so it's not considered an all-time high. However, because there's more shares, Ford became a $100 billion company last week for the first time ever. I didn't know that till this weekend. And again, that fascinated me, that it's the largest it's ever been. And of course, we have the F-150 electric coming out. We have the Mustang electric. And just like every other auto company out there, they're moving heavily towards EVs, electric vehicles. But it appears that Ford is really outperforming, like truly, literally outperforming. And I got to tell you, I look at the company, when I break down the numbers, it does fascinate me. 2020, they saw a bit of a dip in revenue, down about 127 billion from 155, and in 2019. But then you look at like 2021, this year, we've got to be the same. So you're looking really much at for the most part, as it's staying flat, about $127 billion. By 2023, they expect it to go up to about 165 billion, which would be a new annual high, which I like to see. Earnings per share, different story, been holding up really well. That means costs are down. That means they're running the business a little bit better. Higher margin vehicles are selling. So in 2020, they made 41 cents a share. 2021, when the numbers come out, they're expected to be $1.91. Next year, or this year, I should say, 2022, $2.04. 2023, $2.37. So slightly moving up, but if you look at the forward PE ratio, the price to earnings ratio, it's around 10.6. Forward price to sales, which I like even better, 0.61. So very low numbers. Historically, auto manufacturers are going to be a little lower than the market, but I got to tell you, you look at the numbers, you look at what Ford's doing just as a company itself. I think it's going to be one of the electric vehicle companies, one of the old school ones that does well. I think Volkswagen is going to be a winner as well. I think Volkswagen and Ford are really going to differentiate themselves. I mean, Tesla, I don't put in that category because it's a newer. I think Tesla will do well also, and I think some other smaller companies will do well. I think some of the Chinese companies, EV stocks, will do very well also. But when it comes to the old school, I think Ford and Volkswagen probably are head and shoulders above the rest. But again, there could be a lot of winners in there. I think Stellantis, even though it was only at 4% last year, I like it's kind of flying under the radar. I think there could be some upside there. So, to keep an eye on that one as well as an underperformer that could catch up a bit this year. Also, Ford recently signed a deal with Stripe. So Stripe's kind of like Square. It's a payment processing company worth tens of billions of dollars now. Still a private company, started by two brothers from Ireland. Go Ireland. And they signed a deal with them just recently, and they're going to be processing, because a lot of people are buying stuff online now. They're even cars, so they're going to be processing the payments for them. So you kind of see them moving forward, getting more into the 21st century. So I like what Ford's doing, and I think they're going to continue to do well. Another area kind of with the transportation, and obviously electric vehicles are going to be big, is EVTOL, electric vertical takeoff and landing vehicles. So they look like big drones. If you just picture a drone with a bunch of different propellers, um, and instead of just having like this body, it's actually a body where you can sit in. I've sat in several of them at CES a couple years ago, one by Hyundai, one by Bell. Hyundai is working with Uber, I believe. Bell's working with a few companies, but they're getting better and better every year, nicer and nicer. And what's great about them is they are battery powered. So there's no fossil fuels. It's battery powered, number one. And they're being built to be autonomous, self-flying. Of course, they're not going to be when they first come out. It's just the governments won't allow it. And I think people will be a little scared. But they are being built for autonomous. And probably by the second half of the roaring 2020s, we will see them being autonomous. And that's just, again, it's tough to fathom getting into a flying vehicle with no pilot, but it's tough to fathom a lot of things 20 years ago that we're doing today. So it's you have to kind of think outside that box, and that, again, when that prefrontal cortex thinks of yourself in the present, it lights up. You think of somebody else, it doesn't. Think of yourself in the future, it doesn't light up, because it's very tough to picture ourselves in a flying car with no pilot. Trust me. I mean, I'd be a little scared myself, but I can't wait to do it. So this sector is fascinating because it's becoming more and more popular. I've been talking about it for literally years, and people thought it was crazy. But in 2021, we saw billions coming into it. Investment was around $6.5 billion into this sector in 2021. That's 30 times what it was in 2019. So in 2 years, 30x the investment. You're seeing some big orders from some major airlines right now. They placed orders for over 1,500 of these vehicles in just the last 2 years. So that's pretty fascinating. American Airlines has placed an order for 350 flying cars. Flying cars sounds better than EVTL, so I'll go with flying cars. 350 flying cars from Vertical Aerospace. GOL, G-O-L, which is a Brazilian company, airline, ordered 250 from Vertical. Virgin Atlantic, UK-based, 150 from Vertical. Japan Airlines, obviously in Japan, 100 from Vertical. Iberojet, which is a Spanish airline, 100 from Vertical. Republic Airways, which is here, they ordered 200 from Embraer. SkyWest, a small one here in the States as well, ordered 100 from them as well. Azul, which is a big Brazilian airline also, they ordered 220 from Lilium, which is a publicly traded company. And then United Airlines and Mesa ordered 200 from Archer. And Vertical, Lilium, Archer, and Embraer, all publicly traded. Vertical, Lilium, and Archer, I'll talk about them in a minute. They were all SPACs that went public recently. So there's a big push for all these EVTOLs, these flying car companies to go public and raise money, because you saw the money coming into it and starting to get orders. So it kind of made sense for that to happen. But, what people say, well, why would you take this? Well, it's not really probably going to be for everybody off the bat. It's not like the Jetsons, we're all going to have our own. It's about, the last mile. When it comes to deliveries, it's all about the last mile. You get all these goods that Amazon delivers and other e-commerce companies, and they come to these big warehouses, these big logistics centers outside of major cities. It's about that last few miles getting into somebody's door. Well, when it comes to this, it's about the last, let's say, 100 miles or so, getting somebody from downtown Manhattan to JFK. I lived there for 10 years. I did that ride so many times. I've missed so many flights, even giving myself time. Leaving my house on 56 and 8th, trying to get cross town, to get out of the city, off the island, to go to either JFK or go to LaGuardia. There'd be times I'd go an hour and a half and I'm still on the island. I'm still in the mid-50s on the east side. And I'd say, you know what, I'm getting out, took my bags and walked back to the apartment and canceled the flight. So it does make sense, but it's going to be most likely originally for corporations, originally for the wealthy, and certain people that are willing to do certain things. All that being said, if you were to get a nice car to take you to JFK, and if you had to pay double that to know that you're going to be there on time, and it's going to only take you 15 minutes to get there, and it saves you everything, all the stress, the hassle, I'm paying it. I hate sitting in traffic. I mean, so I think there definitely is, there is a market for it. I mean, the total addressable market in the next 20 years for this is insane. Hundreds and hundreds of billions of dollars. So this is real. It's coming. Again, it may sound crazy, but it's on its way. The other thing it's going to do, it's going to help airlines become more green. By that, I mean, airlines are some of the biggest I don't know, I guess culprits, you could say. I don't want to say anything bad, but culprit sounds bad. Biggest culprits of hurting the ozone, all the carbon emissions. Just think about when planes take off and fly and land. There's a lot of stuff coming out of there. So, and we're not close to having battery powered yet. Eventually, I think we will. We'll have electric airplanes, and they're working on it, but we're far away. The other thing is sustainable fuel. They call it SAF. We're getting closer and closer to that, so it doesn't emit as much carbon into the atmosphere. So by doing this and using some battery power for these shorter flights and these shorter distances, it will kind of calm the greenies, if you will, by saying, hey, we're more green now because we're using battery powered. So believe it or not, I think that will work. The European Union Aviation Safety Agency, they did a big study on this the last couple of years. They just put out a 100-page study. They published it. And they suggested that EVTLs could become a reality by 2024. Folks, it's 2022. That's only 2 years away. So again, this may seem like science fiction to you, but I believe it's right around the corner. So people are like, well, why now? Well, what about helicopters and other stuff? Well, helicopters are extremely dangerous. Just many reasons not to the helicopters. They're done. But why now? Well, it's convergence of several technologies and innovations. We now have the batteries that are able to run this, to give it enough power to be able to have battery life long enough. We have the motors that are able to do this as well. And then we have the composite to make this light and make this amazing machine to do it. So all these technologies and innovations came together to allow this to happen. But keep in mind, all new technologies are typically a convergence, and Peter Diamandis says this a lot. They converge to create these new technologies. And you think about like telemedicine. We had to have 5G because we had to have connectivity. We had to have the data to be able to put all this data back and forth. Obviously, we had to have the computers and the power to be able to do this, and the phones to be able to do it with, be able to have that 5G and have the ability to do that video. So a lot of things came together to allow telehealth to become a reality. Everything we talk about, all these mega trends for the roaring 2020s, have typically a convergence of several different innovations to allow it to happen. One other part of this I think is interesting before I talk about a couple stocks is they call them VEIR Ports, VETRI ports. And they're planning on building them, really, they'll be in some in rural areas. Obviously, the land's cheaper and easier to just build something up there. On top of parking garages, multi-story parking garages. I think they'll be on top of big buildings at some point, maybe even, office buildings, apartment buildings. There's a company out there right now, VEIR. VEIR has a division. They have a VEIR Port division, believe it or not. They plan to build 25 in the UK and 10 in Florida for both Vertical and Lilium, two companies. And I need to look into this more because wherever they're going to be doing it in Florida, I'm going to do some boots in the ground and go check it out for you. So I think it's going to be fascinating. And just to let you know that if you're interested in investing in that company, VEIR is a Spanish industrial company. It's a big company. Publicly traded, it actually trades here as an ADR, symbols FRRVY. It's about a $22 billion company. It's got 4 segments. It does toll roads, airports, construction services. And believe it or not, the US is its largest market. Its second largest is Poland. I didn't realize that. I didn't even know they were doing that much business there. But the biggest market, it's a Spanish company, is the US. The revenue growth isn't big. It's in single digits. But the earnings per share growth, it took a dip last year. So it's actually expected to grow over 56% annually for the next 3 years. So a big comeback. If you look at a few years, the stock's only trading at less than a PE ratio of 25, less than price of sales of 3.0. So not bad. However, there's a big asterisk here that if you want to have exposure to the VEIR Ports and VEIR's VEIR Port division, I didn't have time to jump into the exact numbers, but it's a $22 billion company. So I imagine it's a minuscule, if anything, part of the business as far as revenue. But again, if this becomes a $100 billion industry and they are the leader building this, that's obviously very big for them. And, with toll roads and airports, obviously travel should start coming back to where it was this year. So that should be good for the company as well. And the chart looks nice. So it's just something to keep an eye on. So I'm going to take a look at 3 companies here for you. The first one here is, I've talked about a lot. You've heard me say it. It's vertical. So the symbol is EVTL. Obviously, you know why that's the symbol. And just went public here recently. You can see back in December, it rallied a lot, pulled back to 7. Now we're around $8.61. This is a company that, again, I look at it and it doesn't have any revenue projected till 2024. So at least 2 years out, because again, they're not really selling them now. They're getting contracts. They have a lot of orders placed. It doesn't mean that they'll come to fruition. You would think they would, but there's no guarantee of that. So for Vertical Aerospace, $1.55 billion company, expecting revenue in 2 years. And this is their own projections I'm about to give you. They project revenue by 2028 of over $7.2 billion. All right, let's just play that out and say, okay, hit $7.2 billion by 2028. If that's the case and it grows that fast, that company's probably trading at 10 times sales, I would say. So that puts it at what, $72 billion company? And today it's 1.5. So you have a hell of an upside there. You know, what is that, like 45 times or something, 50 times? 50 times, just under 50 times your money. That, again, that is their projections. That's saying they reach those projections. That's saying that it trades at 10 times sales. I mean, there's so many what ifs. The odds of that happening are extremely, extremely low. So let's just take it down and say it hits, you know, at 1.2 billion and it trades at 5 times that. That puts it at 6 billion. So again, it's 4x from where it is here, and that's a you know, small percentage of what they're expecting, and that's a small multiple for a company that would grow that much. So again, it could have zero revenue ever. It can maybe never even get off the ground, pun intended. But it's something, again, to keep an eye on. If you do something, this has to be a basket. So another one that went public via SPAC is Lilium. It's a $1.76 billion company. Again, not expecting any money till 2024, and they're expecting just under $6 billion by 2027. And if you look at the chart, it's not much different. I mean, you look at it, and it's hitting a new all-time low today at $6. It hit 607 this morning, at 621 now, and it's down about 50% from the high in September. So again, there's so many unknowns, so many question marks, but if you believe in this, like I do, it's something where you got to put this away and not look at it for 5 to 10 years. I mean, it could be somewhere in 3 years. It could be at $60 for all I know. My point is, it's something where you have to really, really believe in this, and you have to buy a basket of them. It's no different than looking at CRISPR, genetic editing. I don't know which company is going to get approval, if any, but I am very confident that there's going to be at least 1 or 2 approved in the next couple of years for doing CRISPR genetic treatments, treatments, CRISPR-Cas9. So I buy a basket if I'm doing that. The same thing goes with all these trends, folks. If you buy the basket, you're basically creating your EVTL ETF. So if you say to yourself, I want to put $10,000 into this potential technology, this innovation that could change the world, then you maybe go out and get 5 companies that have exposure to that. You put $2,000 each, because then your risk is dramatically dropped. That company-specific risk is gone. You have trend-specific risk, because if this trend doesn't work, and they come out and they say, this isn't going to work. The moment they go up, these things crash. Done. Move on. Again, they've tested these things, so that's not going to happen. But you never know. They may just not take off. There's been some crazy ideas over the years that never took off that sounded great, though. And this might be one of them. But again, I think there's such upside. I think the total addressable market by the end of 2020 is into hundreds of billions of dollars. And I think there's going to be a lot of huge winners in there. So I would start building a basket now on this weakness, because I think we'll all be in flying cars in the next 5 to 7 years. All right, you might think I'm crazy, but feel free to comment below. And again, thank you from the bottom of my heart for always watching. We love the support you're giving us. We're hopefully going to have an office down here soon with a great podcast studio, so I don't have this crazy looking painting behind me, but we're getting there quickly, folks. Again, thank you so much. Hope you had a great long weekend. Any questions, comments, please put them down there. I do read them, and we'll see you on Thursday. Again, I'm Matt McCall, and that was Making Money.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.